Well, ladies and gents, we did it. We managed to get ourselves deeper in the hole faster than expected. All right, guys, all jokes aside, obviously, this is not good news or time for celebration. What this points to is the fact that a ton of American households have taken on more debt due to the pandemic, lockdowns, loss of jobs, and shuttered businesses. So, today's video will quickly go over where we are as a whole, what this means, and steps you can take individually to do your best to avoid the wrath of bad consumer debt. So let's get it. Right, welcome to the channel. If this is your first time here, I'm happy to be spending a couple minutes with you here today. If you find value in this information I share on the channel, be sure to like and subscribe. So according to data published by the Treasury Department on Tuesday, February 1st, the U.S. national debt surpassed $30 trillion, and it's the highest it's ever been due to the borrowing surge during the pandemic. Look, I'll leave a link in the description so you can check it out for yourself. I want to highlight that back in January 2020, the Congressional Budget Office projected that the national debt would reach this milestone by the end of 2025, but we crossed that line over 3 years early. Now, the New York Times reported that $5 trillion is used to try and combat the pandemic, and those funds were used to fund jobless benefits, stimulus payments, and support small businesses. You know what I mean? And all that was financed with borrowed funds. Now, more than ever is the time you need to get your credit and finances in shape. Of course, one person isn't responsible for this, but eventually we can all do our part to help the collective whole. Moving forward, I can assure you that if you have excellent credit, the red carpet will get rolled out for you whenever you decide to put your hands on some hard assets or any income producing vehicle for that matter. So knowing that now, let's discuss FICO credit scoring and things you can do to improve your score in the coming days and weeks ahead. All right, so keep in mind, these aren't exclusive secrets, but a recent poll done by LendingTree showed that more than a third of the people surveyed don't know how FICO calculates credit scores. So creditors send data to the three major credit bureaus. We have Experian, we have Equifax, and TransUnion. Those bureaus then take that information and use it to generate one or more credit scores. Okay, the most common being FICO and Vantage scores. Now, your score can range anywhere from 300, which is the worst, to 850, the best. In general, if your score is below 670, you'll get a boost in approvals and more favorable credit terms once you've taken steps to raise your credit score. All right, so step one, always, always, always pay your bills on time. Now, did I mention to always pay your bills on time? Okay, your payment history is the single most important factor when it comes to your credit score. Payments past due by 30 days or more gets reported to the credit bureaus, and they immediately cause your score to take a nosedive. Worse off, each late payment stays on your credit report for 7 years. Your best bet is to set up autopay for all your payments. This way, you eliminate any possible late payments. Now, step two, pay off your debts as fast as you can. Okay? Utilization is the second biggest component of your credit score. So, look, there's no need to sugarcoat anything, all right? Banks and lenders make money off of money. So, even though you're paying the minimum amount every month, in most cases, you're only covering the interest. This is why you'll never hear a bank or lender encouraging you to pay off your debt as fast as you can, because they want to eat too, and the less interest you pay, the less they make off you in the long run. In some cases, you'll get a prepayment penalty if you decide to shut the door on their beloved interest payments. All right. So try your best to pay more than your minimum amount each month to save on interest over the long haul. And if you can, make a payment every week to your credit cards. All right, so step 3, increase your credit limits on your cards. What this does essentially is it lowers your credit utilization like we talked about in the last step. Assuming you don't use the extra funds, increasing your limit will reduce your debt burden. So, for example, you have a $10,000 credit card with a balance of $6,000. This means you're using 60% of your total credit limit. Ideally, you want to be at 30% or lower, but 10% or lower is excellent. All right. So in this case, if you get an increase of, say, $5,000, bringing your total limit to $15,000, you want your total balance to be no more than $4,500. Depending on the creditor, you can call them and ask for an increase. And in other cases, you can request an increase online. All right. So be mindful, though. Depending, again, on the creditor, you can get another hard inquiry on your report just for requesting an increase because they'll likely pull your credit report again. So step 4, consider a debt consolidation plan. All right. This is best for folks that have multiple accounts and would rather have one monthly payment rather than 12. Now, it can get pretty crazy trying to pay 12 different payments on time each month. A debt consolidation loan will actually pay off most, if not all, of your debts, all right, leaving you with just one payment per month. Another benefit to this is your interest rate can be reduced drastically, saving you even more money, all right? Another neat trick for some of you business owners out there is to transfer your balances from your personal credit cards to your business credit cards. This helps for 2 reasons. 1, business credit cards do not report to the personal credit bureaus. And 2, it's not uncommon to find a business credit card with 0% APR for, say, 18 to 24 months. So if you didn't catch that play, go ahead and rewatch step 4 in this video. Step 5, don't close old accounts. Keep them open. Now, the reason for this is credit age, which makes up another chunk of your credit score. By closing the account, you may lose the history you have with that account, but the biggest loss will be the overall credit limit you have. All right. With that said, if you have any old accounts with negatives like late payments and collections, you're going to want to consider removing the account from your credit report altogether. Those negative accounts are holding your score down. All right. Step 6. Be careful about opening new accounts. All right, y'all. You have either a soft pull or a hard pull. Hard pulls show up on your credit report and soft pulls don't. So too many hard inquiries can set off an internal red flag that will get you denied for new credit, no matter how good your score is. Example, Josh has an 810 credit score, but he has 22 hard inquiries on his Experian credit report. He goes to apply for that shiny new credit card and gets a big fat denial. What happened is Josh probably has an internal flag on his Experian report for too many hard inquiries. It gives the impression that Josh is hurting for cash, and that's why he's out fishing for new credit from, any and every lender. Now, generally, when you get a hard inquiry and denial, it costs you 5 to 7 points, but a hard inquiry and approval will generally only cost you 2 to 3 points. So if you have a ton of hard inquiries, I suggest you get them removed immediately. And the side note is, make sure you're only disputing hard inquiries on closed accounts or denials for new credit, like going to get a new car and getting 8 fresh new hard pulls before even leaving the car lot, with or without the car. Step 7, right? Moving along. Your credit mix is the final factor when it comes to your credit report. You want to have a nice mix of, say, credit cards, mortgages, car loans, installment loans, etc. If you have 4 car loans on your credit report with no credit cards or mortgages, it doesn't look the best. Same if you have all credit card accounts with no other type of loans. It's not a good look overall. So diversify your account types to give your credit profile that extra push over the top. All right, step 8, authorized user trade lines. Adding authorized user trade lines to your account, this is what's called synthetically raising your credit score. By adding the right mix of authorized user trade lines, your scores will get a major boost overall, leading to better rates and terms moving forward, along with higher credit limits. All right. So inside my Credit Prevail course, you get access to the fastest reporting authorized user trade lines in the industry at up to 40% off competitive pricing. I'll leave a link below if you want to check that out. Another way is to get a trusted family member or friend to add you to their credit card account. You want to make sure, either way, that there are absolutely no late payments on that card. Why? Well, because all the history on that account will get reflected on to your credit profile once you get added. Nonetheless, adding AUs to your credit report can give you a massive boost and set you up to get approved for that big new purchase and get approved for high limit credit cards depending on how you do it. Well, guys, that was a lot. But I'm sure if you take these steps to heart and apply them in a positive manner, you will reduce your overall debt personally, and you'll do your part in reducing the overall national debt sitting at a cool $30 trillion. Now, I created the Credit Prevail course because I want to see you winning. And I want to, selfishly help reduce the national debt by helping others fix their credit. Inside the course, I teach you everything you need to know about restoring your damaged credit, how to maintain an excellent score once you get there, and leveraging credit if your score is already above 781. I share with you all of the effective online methods and strategies along with the rock-solid dispute letters that work to easily and effortlessly repair your credit and remove negatives. Once again, check the description for a free resource and a link to the Credit Prevail course. So until next time, be blessed.